Trader Tina here once again from ShortMeTina.com with my daily recap. Today is Monday, March 2nd. So happy Monday, the last month in the first quarter 2020, and what a way to start the quarter, right? So if you've noticed, I've actually been away from doing my daily analysis videos for the past, I want to say 4 or 5 days. The last one coming, I believe, on Tuesday the 24th. I was very vocal in stating that it was my birthday and I was going away for the week. I went to New Orleans. I had an awesome time. My partner took me there. So if you've never been down there, definitely get down there. I mean, the food is just amazing and awesome. My first time, believe it or not, actually doing Mardi Gras. I'm not going to say that I'm too old for that. Whatever it was, I had a great time. The streets were extremely filled. I got some beads. I'm not going to say how I got them, but I got some beads. It definitely was an experience. Not my first time in New Orleans, but definitely my first time doing Mardi Gras. And again, if anyone needs any sort of suggestions on restaurants or anything like that, I'm a big lover of basically just trying new foods. I've been to, God knows, maybe 2, 3, I would even argue 400 restaurants in my life. Oddly enough, I don't just eat out. I like to cook as well. I just like to experience different things. So that's why I didn't do a video for the past 4 or 5 days. I normally do videos even when I'm away, but this time, after about 1.5 years of doing videos every single day when the stock market is open, I said, you know what? It's my birthday weekend. It's a milestone. I turned the big... Of course, I'm not going to tell you how old I am, but it was definitely a milestone. So I said, you know what? Let me just sort of take the time off and just kind of like sit back and reflect, enjoy. And on some levels, I'm kind of glad I wasn't 100% plugged into the market. Yes, I was checking here and there, but I wasn't like 200%, 100% plugged into the market. But I definitely knew what was going on. Interestingly enough, one of someone on YouTube commented and said, like, here the market is crashing and I'm on vacation. Ironically enough, if you look back at this crash that started back in October of 2018, I was actually also on vacation at that time. I was in Europe. It's like on a little 10 or 14 day Europe tour, but around that time I actually was doing videos every single day. But anyway, now I'm back and I'm here to analyze the market. So what do I see? Anyway, this should kind of still be run of the mill because the price points and the price levels I was talking about back in 2019, but even perhaps back towards the ending of 2018, still in many respects relevant to what's going on right now, okay? So daily chart, the S&P is up about 4% on the day. This is a daily chart, once again, going back to 2017. So what's going on here? So again, back from 2017, we can say all the way to 2019, about 2 years, the market, in my opinion, was trading within a range, right? The lower end of that range, I believe I've said it 20 or a million times before, we can call that like 260 right here. This is the lower end of the range. I'm going to move it. The upper end of the range, it's here. We can call that 295 to 300, right? That would be the upper end of the range. And we more or less cycle through that range, obviously overshooting it a few times without any real sustainability. You can see it here. Let me highlight it. Obviously, although I'm sure you can see it. Without any real sustainability, right? We overshot those levels on 2 occasions without any real sustainability. Overshoot, pullback. Then we fast forward to late last year, and then we finally were able to rally, breaking through that 295 level, right? The 295, 300 level to go all the way to around 340 before topping out. Now, when I was doing videos, I want to say early January, around here, I project, actually, when the market, let's go back a little bit. When the market actually broke out in 2019, finally, I said, well, you know what? I can see us I gave 2 levels. I said, initially, I can see us topping out at around 328, 330 before pulling back, right? We kind of overshot that level a little. That's the overshoot here. We went to around 340. Take note that we were short, right? Because I was expecting that pullback. We were short in the premium member community early 2020. So luckily we were able to take part, or luckily we were able to protect, right, our portfolio by having that hedge on. So while some of our long positions we were stopped out of some of our long positions, we were able to make money when the market declined with some hedges, right? We were short the market in some other short positions. Rambled a little bit. Let's go back. So yeah, so I said we would have overshot to around 330, get to top out around 320 and 330. We did that. Overshot to around 340. Then we had this swift pullback here. The last video that I did on Tuesday, I said, well, you know what? It looks like there's a new range establishing. I thought that there would have been support at 320, and to some respects there was, right? So let's zoom in, right? You can see here on this day, we kind of got that bounce here on February 24th, right? We got that little bounce, but the next day we opened up and just like slicing butter, it kind of slid through that level. I didn't think we were going to get all the way back here, but we did. Look, although we went the low from this entire 15% collapse, what was the low? The low was 285.54. Where did we close? We closed at 296, right? What's that 296? Let me highlight it here. So after that crash, we closed essentially right on this level in which we had a hard time overshooting. So I say that to say levels are important, right? Psychologically, the market tends to gravitate to similar areas, and I believe that it did this with the SPY. Today, obviously, we had a nice update, which shouldn't be a surprise. I mean, if we've had like 7 or so down days, shedding something like 12 to 13%, 7 straight days. So this 4.2% rally we had in the market today shouldn't be of any surprise. We closed at 308.90. No significance really in my mind. So some folks are probably asking, is it time to jump in the market? Should you trust this move? For me, always make the market prove itself, right? There's honestly, there's no need to jump the gun. You can even see here, the market gives you multiple times to get in, right? It's the folks that try to sort of like anticipate a move, right? It's folks that try to anticipate a move that generally gets burned. So granted, the market is up about 4%. Even if it climbs another 4% tomorrow, which is 8%, you're going to have an area, you're going to have a time where the market pulls back. So I say all that to say, as a trader, I would wait, let the market prove itself, right? Directionally, right? Does it want to come down a bit more, or does it want to continue moving? Let it prove itself directionally. As an investor, maybe you can nibble here. There's a lot of stocks that I spoke about on Tuesday that, in my opinion, they're good picks to sort of grab up if they're down 10, 15, 20% as an investor, because your time horizon is 10, 15, 20, maybe even more years if you're lucky. So for me, SPY sitting here at 308.90, let it prove itself. We'll see. But take note that support at this point is around 295 to 300. What else? All right, and really quickly on the IWM, because I spent such a long time talking about the SPY, IWM daily chart up about 3% on the day, closed at 151.03. Just want to point out that after this crash, right, granted, so there's multiple levels of support, right? So let's say the first level of support, right, around 160, which was once a resistance level, the market sliced through there. So for me, the next level of support would be this line here, and you can see we got that bounce not yesterday, why am I saying yesterday? Today's Monday. We got that bounce on Friday when the market went as low as around 143.41. So in my opinion, support in the IWM comes in, and this I'm shaking the support line. I don't know why, but just so you can see it, that comes in. I've been saying this for a very, very long time. Go back and listen to any of my videos, right? Going as far back as like early 2019. Support for the IWM comes in at around 144, 145. I always give it a range. And for the, 143 to 145. And the low after that crash essentially was around 143 to 143.91. So it's smack dead in the middle of that range. So if you wanted to go long, that would have been a great time to go long. You would have gotten that 3% bounce today. So it's not about getting the bounce, right? You'll always, in my opinion, you'll always get a bounce, when you buy its support. It's whether or not that bounce is going to be sustained, right? And if all you were looking for was a 3-4% return, then absolutely get that bounce. If you're looking for more, then for me at that point you're kind of like wondering whether or not it's sustainable. For me, again, as a trader, let the market prove itself. There's absolutely no reason to rush into trades, right? There's absolutely none. Let it prove itself. It eventually will, and directionally you'll know what you need to do. All right. Hope that makes sense. Comment in the comment section. What else? All right, obviously no analysis is complete without talking about one of my favorites, JD. It's doing great things today, up about 12% on the day. You can see a close here of 43.30, made new 52-week highs today, going as high as 44.12. The stock is doing precisely what I thought it would do. For me, 50, around 50 is the next level. I've been touting 50 for a very long time, and we are almost right there, about 6 to 7 points away from there. Trade to be took in the premium member community. I'm always an advocate of holding on to your winners. It's not always easy. Always an advocate of holding on to your winners. Why? Because we initially bought right here, right? Back in January of 2009, when the stock was around 1920, we got into that trade. And if you held it, 43.30, you do the math, that will make up for a lot of your losers. All right, so JD, keep it on your watch list, keep it on your radar. I see 50 in the cards, and if the market comes charging back, which it eventually will, you're potentially looking at a 60, 70. I'm gonna keep it there, but you're potentially looking at a stock that can give you an extra 20, 30, 40 points from here. So loving the price action of JD today, and let's wrap it up with a penny stock. What else? All right, so let's cap it and round it out with ticker HTBX. We're going to look at the hourly because it's a penny stock, and the majority of the move actually came the last few days. But we're just going to zoom in or zero in on price action today. You can see stock gapped up, consolidated, essentially meaning traded sideways for the first, which is actually a really great setup in my opinion. Gap up, consolidate, traded sideways for the first 2 to 3 hours. No, more than that. Like the first 2 to 4 hours of trading. In the last few hours, you can see this huge run up here. We went as high as 87 cents. So if I didn't say congrats to the bulls, huge congrats, up about 142% on the day. Granted, we closed, it says 79 cents here, but I'm seeing around 80 cents, so let's go with 80. Closed around 80 cents, and even with that, it's up an additional north of 15% in after hours. I see a quote of around 91 cents, which essentially means it's trading somewhere here above session highs, which is good, obviously on above average volume. The volume bar is not here. I took it away. I don't know why. I'll bring it back, but it's obviously on above average volume. So heading into tomorrow, this is definitely a low float stock, meaning it has the ability, clearly like you saw today, to put up 100, north of 200% in one day, and there's a possibility this can actually continue, again, considering that it's a low float stock. So what I'd be paying attention to, you know what I'm going to say, always pay attention to the open and close, but more importantly, I would say to pay attention to session highs, which is around 87 cents. If it can trade above there, or if it can get above there and sustain that move, you're potentially looking at a stock that can trade north of $2. Yes, I wouldn't jump in because obviously it's a penny stock and it's very volatile. In the same way it can go up 140% in a day, can actually crash 50, 60, 70% in a day. Be careful, be cautious, but there's the potential here for another 100% move. Key is pay attention to how the stock opens and closes, and also pay attention to session highs of 87 cents. Right now, we're doing great by trading above that in after hours. If it can sustain that move, trading above, let's say around that 80 to 87 area, I think you're good. All right, we're going to cap it there. I know I only did 4, but I spent so much time talking about SPY. I'll build up the momentum. I've actually missed it. Felt a little bit rusty in the beginning. Hopefully, I kind of got the hang of it again towards the end. And again, like I said, we'll build up momentum, and I'll do more every single day this week because I missed it and I am no longer on vacation. All right, so we're gonna cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of that video, do 3 things for me. You missed my birthday probably. you're listening to this video, all I ask is three things. One, comment in the comment section. What did you think about my analysis? Are you in the SPY, IWM, JD? How about ticker HTBX? What stocks are you trading? Did you trade anything today? Did you get decimated in the market last week? Let's be vocal. Comment in the comment section again. Like this video. Well, if you liked it, that's the first thing. Two, I do videos daily. I only took a couple of days off because I was on vacation. Outside of that, you can expect a video every single day when the stock market is open. If you want to ensure that you do not miss that, please hit that, smash that subscribe button. And lastly, my friend, last thing I'm going to ask you is, right now we're hosting on our website a free 14-day trading course. Why am I doing this? Well, I have been trading for a long time, north of 20 years, almost 2 decades. And in that free 14-day trading course, I share a lot of the things that had I have known, I would have saved myself years of heartache, right? I would have gotten on the right path to trading and profitability almost within the first few weeks, I would say, or first few months, if I knew what I'm going to tell you in that free 14-day trading course. It's completely free. You do not need your credit card. So if that is something that you're interested in, definitely head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening. And as always, thank you for the support after all these years. I will talk to you tomorrow.